Earnings season heats up this week with major reports on deck from tech giants like Meta, Microsoft, Apple, and Amazon. Now, despite growing uncertainty, analysts still predict strong profit growth this year from the so-called Magnificent Seven. But any stumble in earnings or forecasts could put real pressure on the markets. This week is also crucial for UK banks as they report Q1 earnings, with President Trump's tariff policies still weighing on investor sentiment. I'm joined today by StoneX Senior Market Analyst Fiona Cincotta. Hello, Fiona. Thank you for joining us today.
Hello, thank you.
So last time that big tech delivered earnings, President Trump had just come into his presidency and Wall Street was laser focused on AI profits. So what is different this time around?
Yeah, so it's a very different environment that we're being faced with as we come into earnings season for these big tech. So, very much the focus, as you said, was on AI. This time, AI is really taking a bit of a back seat as investors are really focused on the Trump tariff turmoil that's wiped 5.5 trillion off the US S&P 500. So that's where the focus is going to be on. It does mean that sentiment is a little bit nervous, a bit more cautious as we head into these numbers. Obviously, if we think back to when Trump just came into power, it was very much this idea as well of sort of pro-growth policies and what could he do for the markets. So yes, the mood has definitely changed. And I do think that means that we're heading into the numbers with a bit more caution rather than optimism.
However, Wall Street's still forecasting 15% profit growth this year for these major tech giants. So do you think that's actually realistic given the rising recession risks?
No, it feels very optimistic. I mean, if we have a look at those sort of profit expectations, they haven't really budged that much since we've seen the Trump turmoil impact the markets. Now, obviously, it's worth keeping in mind that Q1 was before Liberation Day. That obviously covers the period from January to March, end of March, before Liberation Day, which was on April 2nd. So we're not expecting Q1 numbers necessarily to be impacted, but it's much more the guidance and the profits and the forward expectations. As you said, I think for the whole year outlook, that does seem rather optimistic, given that we haven't seen that much in the way of downgrades, especially for these big companies such as Apple, Meta, Amazon, who could be affected not only by sort of the change in sentiment, but also Apple, for example, by supply chains.
Well, let's actually talk about Apple, because given the impact on tariffs and their big announcement that they are to shift all iPhone production to India, what are you looking for in Apple's earning reports?
Yeah, so I think it's going to be really interesting because I think Apple does have the possibility to actually benefit in Q1 because we may see this phenomena of sort of a consumer pull forward, demand pull forward, where customers have actually been a little bit concerned about what might be coming to actually increase purchases of Apple devices prior to any announcement. But I think that may be a one-off benefit if we do see it. Mm-hmm. Outlook is going to be very much on the weaker side. We expect going forwards that potentially we could see a sharp slowdown in sales, given that there is a potential for costs to increase significantly.
So let's switch to UK banks now, who are reporting earnings this week. Obviously, there is a lot of turmoil amid Trump tariffs. What will you be watching for?
Yeah, so I think, UK banks' earnings could be very interesting to watch as well. We could almost divide them into two camps. We've got UK banks, which are more domestically focused, such as Lloyds and NatWest Group. Then you've also got the banks which have more of an international outreach, and that's including Standard Chartered, HSBC, and of course, Barclays. So, I mean, it's worth keeping in mind that, again, with Q1 earnings, that's not when we sort of had the Liberation Day announcement. They were sort of relating to the earnings before that period. But I think there was already an element of caution, nervousness, not just about sort of Trump and potential tariffs, but also here in the UK with the economic outlook. We'd had the Labour budget back in October, which was going to increase the companies, the amount of tax that they would need to pay on employees' national insurance, also minimum wage hikes. So there were a little bit of concerns about the outlook for UK anyway. So that could come out in the domestically focused banks. We'll be looking out for a potential increase in bad loan provisions. But then as far as those international banks are concerned, again, any nervousness surrounding what the potential outlook could be, particularly as far as HSBC and Standard Chartered are concerned, will be a major focus.
Thank you, Fiona, and thank you for watching. For more content like this, please like and subscribe to our channel. See you later.